What's going on, guys? Welcome back to the channel. Now in this video we have to talk about what a short attack is and how AMC is getting short attacked and exactly what this implies, as well as we're going to go over the Ortex data and talk about the 10-year treasury yield, because all these factors are playing a big role why AMC is down so much today. And this is very important that you guys do pay attention to the short attack and the 10-year treasury actually going down in yield. It's very important, so we have to cover it on this channel. Now, without any further ado, let's get into this video. Hit that like button for me and help push this video out to as many apes as possible, because all apes need to be made aware of what is going on right now. And yes, if you guys are still wondering, is the short squeeze still on the table? Yes, it is going to happen. Shorts are digging themselves an even bigger hole, and we do know this because of platforms like Ortex that at least report to us the actual legal shorted shares that are outstanding in the marketplace. Now, we are not being reported the naked shorted shares, so that is still up for question. But as we do know, because AMC is on the threshold security list, that number is very, very high. As well as that, we are likely to see a gamma squeeze at the same time we do see a short squeeze. That'll all ultimately push us up to these multi-$1,000 price points. But keep in mind, this is only my opinion. I'm not a financial advisor or a financial planner, so always do your own research and come to your own conclusions. Now, getting into what a short attack is, and then we'll go over the Ortex data that really signifies that this is going on, at least through the avenues that we could see the legal shorted shares. Now, put simply, a short ladder attack is when both sides of the buying and selling of stocks are played by traders in an attempt to devalue the stock in question. Short ladder attacks, example, short A sells a fake share at $10, short B buys it covering an open position. So a lot of this does go on behind the scenes, and a lot of this is illegal. They go even as far as to run fake campaigns, make bad articles, and really this does coincide with iceberg research, which is something that I put out on this channel, that I was talking about how I do think they're possibly hired by companies like Citadel and other hedge funds or even market makers that do have short positions in AMC to help this snowball effect and drive out apes of their positions to ultimately cover at a cheaper cost. Now, that is very important. Let me know down below in the comment section if you guys have sold out, what your price target is to realistically sell out, and what your plans are if AMC does continue to drop. Now, we're gonna read a couple paragraphs of this article that goes into more depth about the short ladder attacks in AMC and specifically GameStop, and then give you guys the Ortex data that really signifies this theory that I do have of AMC is going through a short ladder attack as we currently speak. Now, let's get into it, guys. It says a short ladder attack is a very intentional maneuver that requires highly detailed planning. Historically, it has helped hedge funds grow their assets under management more rapidly. However, in instances like GameStop fiasco, it can backfire with a little help from retail investors. And that says what a short ladder attack really means. A short ladder attack has multiple moving parts. The process starts when a firm or fund takes on a sizable short position in a stock. From there, they will do whatever they can to lower the stock's value. Since they are using a short sell to bet against the stock instead of investing in a stock in the hopes that the value increases, they make money when the stock value shrinks, which we already do know. But it says in some instances, a fund might pull a company into bankruptcy. If bankruptcy does happen, hedge funds celebrate because they never have to transfer their counterfeit shares, which are used for shorting stocks, into real shares. Also, capital gains taxes become a moot point. Now, this is basically saying the naked short selling, essentially they would never have to cover these shares, which we already do know about, which is literally taking money from people that think they're investing in the company, taking it for themselves. Company goes bankrupt, they never have to pay this money. And we know this is going on because AMC is on the threshold securities list. Now, there's no telling how long they will be on this list or how bad it truly is, but it has to be at least half a percent of the company's total free float, or 10,000 shares per day for 5 days. So we at least know we have about 50,000 shares at the minimum that will need to be bought back by hedge funds and institutions. So I do think there is a high incentive, especially right now, to continue to spread FUD and drive down AMC share price. Now, Short ladder attacks aren't wholly illegal. While they might be malicious, short attacks aren't wholly illegal. However, there can be illegal attempts to drive down a stock's price below its true asset value. This includes market manipulation in the form of bribing people to avoid company offerings or producing slander about a company to keep it from being profitable. Now, we know this is going on everywhere in the financial media. You have been seeing these articles for weeks now, and they're getting paid by somebody. We all know who the somebody is. Companies like Citadel, who have short positions in AMC that are severely down on their short positions. That is the best thing they can do to try to drive down AMC's share price, is spread as many of these FUD articles as possible. And I do quite frankly think they're paying top dollar for people to write these articles. And we will never know if this is truly happening unless it does come out in some report. But that is only my opinion here. I do think this is happening, and I think a lot of people do agree with this, as well as Iceberg Research. They are so secretive and manipulative. This is the best firm to actually do this. It's hard to find any information about them. They have been known to bankrupt companies in the past. Now, they did not come out with a short report on AMC like they always have done in the past. Instead, they just said AMC is not valued at its fundamental price, so we are shorting the stock. Even though there's so much risk in shorting a stock like AMC, I do think there's big money behind that specifically. And the day that did come out, we dropped down 12% at its lowest point. We closed the day down about 4%, and since then, every single day, we have been dropping lower and lower on AMC stock. So I do think it does correlate with this, and the fact that they're willing to say this. Now, it's not clear if they even have a short position on AMC. They might not, but if they do, you got to know they're getting paid a lot on the back end by somebody, probably Citadel, to say this and put their neck out on the line, because we're bankrupting these hedge funds and institutions. The history shows that the scoreboard is the chart, and we are winning this. That is obvious to anybody involved. But now let's turn our attention to the Ortex data that really helps to signify my thesis here, at least in my personal opinion. Now, we do have short interest change of positive 4.41%, return shares of 1.89 million, borrowed shares of 6.1 million. So that is a net gain to the total shares that are sold short for the day of 4.21 million. That brings our total to 97.42 million shares. And guys, keep in mind, considering we only had about 60 million in volume yet again for today. That is what Ortex is signifying. This data might not be fully refined yet, but about 62 million in volume for the day. This is a huge number of shares that will have to be covered at some point in the future. Now, we have the say-so here in what price they have to cover. As you guys do know, we are the majority shareholders. If we are on the same boat, we are all doing the same thing. That is simply the fact here. But the short interest percentage of free float is at 19.04%. Once you get over 20%, that is categorized as extreme short interest, and you are pretty much 100% guaranteed to see a short squeeze. Now, let's turn our attention again to the 10-year treasury bond. And some of you guys might be wondering, why are you even talking about this? Why does this play into what is going on with AMC stock? And it really comes down to algorithmic trading programs and the 10% owners in AMC, roughly 10%. It can change on any given day because hedge funds and institutions move their money around a lot. But institutions, hedge funds, they are the 10% owners in AMC stock. And if they were to sell out, you would have a huge impact on the share price. And the 10-year treasury gives you the overall market sentiment about what is going on in the marketplace. And what we're about to say might surprise a lot of you guys, because most people are under the impression the economy is doing great, which on paper it is. But the fact this yield is going down so fast and so rapidly, we are seeing a lot of big money piling into these bonds because they are inverted. Once hedge funds and institutions or whoever it is start buying these government-backed bonds, which are known as the most risk-free investment you could possibly buy, once they buy into those, it drives the price up. The yield is actually fixed, so it brings, or the return is fixed, so it brings down the yield in what you would actually get if you bought these bonds. So it's basically inverted. The higher the bonds go, the more people purchase them, the lower the yields do go. Now, What does it mean when the 10-year treasury bonds are dropping so hard in the way that they have been? You guys can see this on the 5-day chart. They are gapping down. We've went from about 1.5% down to 1.31% on these 10-year treasury bonds, which is a huge move for a 5-day period. And you guys can see after this 5-day period, really just a couple days ago, we were pretty flat on the 10-year treasury bond, going from about 1.44% up to 1.47%, back down to 1.44%, pretty much leveling out at about this 1.44%. So what is causing this huge drop in the bond yields? Now, declines in the 10-year treasury bond yield generally indicate caution about global economic conditions, while gains signal global economic confidence. Now, that is telling you when the yields go up, there's more confidence in the economy. That is why you did see back in March of 2020, obviously, when the pandemic happened, you've seen the treasury bonds absolutely tank, guys. It was at 0.67%. So usually before you even see a crash like this, you will see the bonds start to reflect this. You can see January 1st of 2020, we were at 1.97% yield on these 10-year treasury bonds. By the time the market was literally crashing, and even before that, we had dropped to 1.58%, which, like I will say this again, even a 0.3% move in the bonds is huge, and that is a lot of money flowing into these treasury bonds. So this right here is essentially telling you two things. Obviously, it's telling you that big money, they are worried about the economy and they want to put their money up for risk-free assets. It is also telling you we are probably likely to see a market downtrend before we actually do start to level out and flatten out, because as we do know, the overall stock market is at all-time highs. That is not a question. We are at all-time highs. I believe we even hit all-time highs yesterday. Don't quote me on that, but I think yesterday. So the fact we are seeing this huge divergence, and the fact the 10-year treasury bond yields are actually going down at such a fast rate, this is signifying to you guys a lot of big money is worried in the marketplace. Now, how does this play into AMC stock? Well, I think it's quite simple when you guys do think about it. We know AMC is held by hedge funds and institutions, about 10% of the company. So I do think a lot of those guys are probably selling out of their positions, as well as we are seeing shorts doubling down on their positions, ultimately creating a two-front problem to drive down AMC's share price. Now, as apes, if we hold our shares and even collect more shares and gain more ownership in AMC, we will literally force the shorts to cover at whatever share price we want to, because I do ultimately think this is going to be a short-lived event with AMC stock. Now, that is all I have for this video. Hopefully you guys can take this economic lesson away from this video for the rest of your guys' investment lifetime. Now, with that being said, check out the links down below in the description. There is a link for public, no deposit necessary, no need to even link a bank account. Get up to $70 in your choice of free stock. It takes about 3 minutes time, so I do highly recommend you guys check that out and get your free stock, as well as deposit $100 with Webull, get 4 free stocks, each of them potentially worth up to $2,400 a piece. Check those links out if you have not already. Great brokerages to be a part of, as well as if you guys want to start winning on your options trades, as well as long-term investments and crypto. Check out the link for the buy and sell alerts. Join a community of about 40 members strong. This source is great information all day long. With that being said, I will keep you guys informed, and I will see you in the next video.